Welcome to our session today again. As we continue to revise, this is a question that I want us to look at, and this question was tested in November 2019. Question number 4. November 2019, question number 4. Remember, what we are looking at is consolidated statement of financial position. That is our concept of today. Consolidated statement of financial position. Consolidated statement of financial position. Statement of financial position. Consolidated statement of financial position. Consolidated statement of financial position. So looking at this concept, even before we look at that question, my good student, it would be very appropriate, first of all, for us to consider the format of how we are supposed to present our statement of financial position. So that in the event that maybe you are in exams, the best way of handling it, first of all, maybe I can advise you guys that for you to earn a lot of marks, because remember, like consolidated statement of financial position, the same case with the income statement, anytime you're working with groups, many a times you'll always be having a lot of direct entries. And for you to scoop a lot of marks, you can start with the format of the statement of financial position. So that's why it's very important for us to always understand how we are supposed to prepare the statement of financial position. So look at our format, assuming you're talking about H Limited, group statement of financial position as at 30th September or 30th December, 31st December, assuming 31st December, say 2020. So looking at the format, this is how we are supposed to prepare. This is how we are supposed to prepare our statement of financial position. This will always be our format, where in this case you are going to consider the following, where in this case you are going to talk about, of course, our non-current assets. So we have our non-current assets. For non-current assets, of course, we're going to consider our property, plant, and equipment. Take them on a line-by-line basis. Take them on a line-by-line basis. Take them on a line-by-line basis, whereby you're going to consider the PPE for parent, PPE for subsidiary only. Remember, you're not taking associates and joint venture. Then adjust with other elements such as what? Maybe fair value adjustment, fair value adjustment. And whenever we're having, say, like an aspect of, you can be told that maybe we had kind of talk about depreciation, which was undercharge because of the fair value. So you add that depreciation, fair value adjustment, depreciation, fair value adjustment, depreciation, assuming you're having it, right? Assuming you're having it, you're going to deduct there. So that we'll be having our figures there. Then we'll also be talking about the aspect to do with goodwill. We're having, say, like our goodwill at that point. Then whenever we're having an associate, we'll also be talking about investment in associates. Investment in associates. Investment in associate. We'll be having it at that point. And consider other investments of the company. Consider other investments that we'll be having. Other investments that we'll be having. Have them there. So that as at the end of the day, we can talk of what? As at the end of the day, that should give us what? That should give us, of course, our non-current assets total. Then consider our current assets. Consider our current assets. Consider our current assets. Having our current assets, we can all talk about the aspect to do with number one, inventory. And how will you determine our inventories? We are going to talk about the parent company or the holding company. We add the subsidiary company. We less any aspect to do with the component where we mention the aspect of unrealized profits, unrealized profit on sales of these stocks. So talk about you less UPS, unrealized profit on sales. We should be having it at that point. Then talk about our figure there. Consider our accounts receivables. Accounts receivables. Accounts receivables. For accounts receivables, of course, you're going to have the parent. We add our subsidiary. We less any component to do with intercompany balances. So we less intercompany balances. Intercompany balances. We have it there. Then come and talk about our aspect to do with maybe cash and cash equivalents. Have it at that point. Consider, suppose we had an item of maybe cash in transit. Come and consider our cash in transit here. Cash in transit. Come and consider our cash in transit at that point. So that at the end of the day, we can have our total current assets. So they should give us what? Our total assets. Total assets. We'll be having it at that point. Equity and liabilities. Talk about equity. Talk about equity and liabilities. Equity and liabilities. For equity and liabilities, take exactly the way these figures are on your statement of financial position, the one that you are given. No adjustment on that. So talk about ordinary shares, the first one, and you will be taking the ordinary shares under what? Under the parent company. Have the way it is like that. Take your share premium if you're having share premiums. If you'll be having your share premiums, you take it the way it is. Then other component you can talk about, these are retained earnings. For retained earnings, of course, you will have to calculate the retained earnings. This one you'll have to calculate. This one is direct, this one is direct. This one you'll have to calculate retained earnings. Then NCI share. Also that one you'll have to calculate. And that is what you're talking about. The item to be disclosed in the statement of financial position. The items to be disclosed in the statement of financial position. So the moment you do have that case, that should give us our total equity. Consider if we had any non-current liabilities. Consider if we had any non-current liabilities. Consider if we had any non-current liabilities. Maybe such as what? Long-term loans. Long-term loans. Long-term loans. We'll be having it at that point. Then talk about our current liabilities. Talk about our current liabilities. Talk about our current liabilities. For current liabilities, of course, we are going to consider our accounts payable. Accounts payable. In this case, you are going to take the parent and subsidiary, then less any intercompany balances. Less any intercompany balances. Whereby you're told that maybe subsidiary was owing parent, or parent was owing subsidiary. We'll have to take that amount there. Come and talk about maybe proposed dividends. Proposed dividends if we didn't pay that. Talk about maybe we had a component to do the deferred payments. Deferred payments. we were acquiring this company today, but I was not paying the full amount by that date, whereby I was acquiring, yes, this company, but I was not paying for the whole amount for that company, for that subsidiary. So you're talking about the deferred payment. Then we can talk of maybe other accruals that we'll be having. Other accruals that we'll be having. So that should give us our total current liabilities. So taking our A plus B plus C, this now should give us our total equity and liabilities. Total equity and liabilities. Total equity and liabilities. We should be having it at that point. So then that should give us what? That should give us a format of consolidated statement of financial position. That should give us a format of consolidated statement of financial position. So basically, whenever you have this format at the back of your mind, you'll find that it will be very easy. For exams purposes, so long as you have this format, just have the format the way it is. You'll find that some of the items here, they are just direct. So you take them, except for here, maybe you'll be required to calculate goodwill, maybe investment in associates, but such other items are direct. Like here, inventories, if you've determined your UPS, things will be very direct. Accounts payable, you just adjust with whatever that you're given intercompany balances. Cash equivalents direct, cash in transit will come direct. This one direct, maybe retained earnings you'll have to calculate. Accounts payable direct, proposed dividends might come direct, deferred payments maybe you'll have to calculate, and accruals will come direct. You'll find that even without doing any workings at this point already, you're having some points. Also, many a times PPE is always direct. So you'll find that even without doing any workings, already you've earned some marks. So to cement this concept clearly, I'll want us now to consider our illustration question. And the paper that I want us to handle, that should come from November 2019, question number 4. As you are revising, this will assist us very well. November 2019, question number 4 is what I want us to handle. And this is our question. You can go through it. I'm sharing it on the screen.